Next is we are discussing about the topic that is socially responsible investing. Socially responsible investing, a social investment, sustainable, socially conscious, green or ethical investing is any investment strategy which seeks to consider both financial return and social environmental good to bring about social change regarded as positive by proponents. What is meant by socially responsible investing? Socially responsible investing is an investing strategy that aims to generate both social change and financial returns for an investor. Socially responsible investments can include companies making a positive, sustainable or social impact, such as solar energy company, and execute those making a negative impact. Next point is what are examples of social responsible investments. One example of socially responsible investing is a company investing which goes directly toward organizations that have a track record of social responsibility through helping the community and have been unable to garner funds from other sources such as banks and financial institutions. What is the difference between ESG investing and socially responsible investing? ESG looks at the company's environmental, social and governance practices alongside more traditional financial measures. Socially responsible investing involves choosing or disqualifying investments based on specific ethical criteria. Next point is, does the socially responsible investing work? Socially responsible investment performance. Many investors have questions about whether a socially responsible investment strategy means sacrificing investment returns. In 2021, most sustainable funds earned better total and risk-adjusted returns than their category indexes according to Morningstar. And next point is what are 4 examples of social responsibility. Breaking down the 4 types of corporate social responsibility. Environmental responsibility for companies committed to CSR. It is important for business to engage in environmentally friendly practices. Ethical responsibility, philanthropic responsibility, economic responsibility, the benefits of CSR. What are the 3 elements of, next point is what are the 3 elements of social responsibility? There are 3 fundamental components of social obligation: market activities, mandated activities and voluntary activities. Market activities means according to the market activities will be changed, and mandated activities means it is compulsory to everyone, and voluntary activities means those who are interested to do voluntarily, that is the voluntary activities. And next point is what are the 4 main benefits of social responsibility. What are the benefits of CSR? CSR means social responsibility benefits. Social responsibility. That is what are the benefits of CSR? CSR increases employee engagements, improves bottom line financials, supports local and global communities, contributes to the United Nations 17 Sustainable Development Goals, increases investment opportunities, press opportunities, and increases customer retention and loyalty. Not only the United Nations, it will be applicable to the entire globe. And next point is what are the 4 dimensions of social responsibility. There are 4 kinds of social responsibility, that is legal, ethical, economic and philanthropic. Legal means that is licenses and trade licenses and investments, all these will be under legal. Ethical means according to moral ethics also will be there in social investment. And economic and philanthropic. These are the responsibilities of 4 dimensions in social responsibility. Wishing you all the best.